Good morning. Oh, I didn't even set shit up. Oh, well. Let's go over here. And YouTube Studio. I'm on early again. Content. Live. Monetize it. So you mofos have to watch ads. Yeah, it's the year of DPST. Hold on. I turn that down. Okay, and oh, okay. What did I get a notification about? Oh, new software detected in the fleet. Who? Who's going to? Wow. A quarterback from the New York Giants practice squad is going to the Jaguars? Okay, hold on. That alert just triggered me. No, it doesn't. Oh, and then I gotta watch the freaking video. I'm not gonna watch the video. No. Let's get over here. You do 12:27. There we go. Hit the thumbs up button. Let's see, and we're gonna go to live chat for anybody that's here. I think there's me and a bot. Okay. I haven't brushed my teeth this morning either. Let's see. We're gonna do some scans because I've got what's RYCEY. RYCEY. This is Rolls Royce. That's a luxury brand, man. You have the Golden Cross here on the weekly. RYCEY. Let's see if Seeking Alpha has it. RYCEY. It's a strong buy. RYCEY. That's not in FinViz. Let's see. Market cap 32 billion. This is yesterday. There it is. RYC. Oh, it's over the counter. Over the counter. Okay. Yeah. Let's see. Founded revenue. I mean, they have solid revenue, valuation, growth, momentum, profitability. Does not pay a dividend. They're only trading. Shares outstanding. Yeah. 8 billion shares. They're trading 3 million shares a day. So it's not light, but Interesting. I don't know too much about Rolls-Royce Holdings, but I'll look at the chart for you. No problem. Should I get yesterday's heat map? Just seems boring. And we might as well get it. Share map. Copy. And then, okay. Yawn. And copy image. Boom. Okay. We'll place that. But it was a good day. Okay, let's do some scans. I needed to, somebody asked about RYCEY. Okay, let's put on the do not disturb. One large expense. Oh. I don't know why I'm getting those emails all of a sudden now. I think because I'm now using Power. Ooh, look at it, look at. Scans. TSM and Pepsi. TSM, buy it all day long under 100. I said that one. Let me see if anything's really moving. There's nothing huge. I mean, Costco is down at 662. Costco dividend, yeah. Ex-dividend date is today. When was the hold on. Costco. Let me see. Costco. Dividends. Ex-dividend date 12/27. So you have to own it today. I think. Let's see. What's 662 minus 15? Oh. What's 15 divided by 662?
That would be approximately 0.02265.
Yeah, I don't know if it was taken out. Let's see. There we go, Wikipedia. We'll just go to Wikipedia and look. Okay, United States, tax consequences, exceptions. Where's the example? Oh, let's go to Investopedia. Investopedia is so much better than Wikipedia. X. Here we go. Examples. Understanding ex-dividend date. Payable ex-dividend date and stock price. Example. To illustrate an upcoming dividend on Tuesday, July 30th. The record date is Thursday, August 8th. The ex-dividend date would be Wednesday, okay, August 7th. Okay, so the ex-dividend date is today. Costco, we'll put that in our notes. Is today. Morning, Timothy. Virginia for lovers. I will be passing through your state probably tonight. I'm driving back to New Jersey. So, I do have to put that in. No show tomorrow. Okay. Wah, 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 wah. Okay, so the ex-dividend date is today. Okay, and that's the core portfolio. Let's see if there's anything in our brokerage holdings that's different. Nope. Covered call, ETFs, JEPI. Energy names. NXC. I mean, this one's just, it's been a solid earner. I'll put it in there. NXE. Levered ETFs. Oh, some shorts. Some shorts look like they got some bullish momentum. Let's see. Anything with confirmation? Really? Nope. Nope. TRK is the double 2 times bull of the ARKK. That's been solid. I mean, God. Just look at that one. 125% in 56 days. Yeah, Kraft Heinz I have in my Webull account, like 1 or 2 shares. I think it was given to me. Let me just fix this. Font size will go down. We'll go down. Stroke will go down. Put it down 1. Okay. That's good. KHC is, I'll look at it in a little bit. Let me just finish these things. It's not a great it's not a great stock. I mean, personally, I think if it was given to me, I wouldn't necessarily buy into it just because I have to be excited about a stock. Morning, John. EVgo, that one's just breaking through. Massimo. This is a semi. KLA. No, is that the campground stuff? Zoom, ironically, we'll put that in. Zoom. ARKK. Cigna is breaking through the... it's got confirmation. Put our ARKK in. AMAT, we're going to put in. Applied Materials. And TSM. This one's kind of interesting. I mean, listen, it was a $60 stock. It's a $74 now. Zoom. Okay, let's look at the Dow. Travelers, Honeywell, and 3M. Let's look at the NASDAQ. Pepsi, Honeywell, Zoom, Mondelez. EXC, Starbucks. Correct me if I'm wrong, but God, Starbucks should be over 100. I think they got screwed in the Israeli thing, and they got mixed up in that. I think it's just going to cover that gap down, it looks like. Down to 95.12. You look at a weekly, and you're hitting the 200-day. Nothing crazy, nothing nuts. Let's look at the S&P. There's a lot of cross-ups here. Somebody asked me, EMR, Emerson Electric, EXC, General Dynamics, people like that one, so I'll put that in. Mondelez and Pepsi. Okay, let's look at Kraft Heinz. I got a question. Okay, let me put that in. Damn, I didn't think I was going to have a big... Okay. Intel's crazy good. And I should have been in it a lot. I think Intel, I was saying buy it under 30. But Kraft Heinz, what's... KHC, not KHC. Okay, so it got you out 13% gain here. I mean, Timothy, that's a solid 14% you could have had before it kind of turned around. That's a nice one. The algorithm makes you 25% versus just making 1% over 24 months, 21 positions. So it's about one trade a month. And you can see the last two. Last two have been solid. You win 52% of the time on this one. But part of that reason is because it literally has done nothing. And so what the algorithm does is keep you out. It gets you out during these slides. Gets you in during the upturn, but gets you out during the slide. So the algorithm is really good in a situation like this where you've just got this range, where it's trading between $30 and $45 and then just rejecting off of that. But the 200 days kind of, let me remove this. The 200 day is just kind of, it's moving positive, but you're getting a death cross. And so the 50 day is kind of crossing under that 200 day. And make no mistake, it probably will, because it's not going to automatically bounce up. It's going to continue down. That downward pressure of this past is going to still bring that 50-day moving down. But you have the MACD moving up. You have the RSI buyers are starting to show up. So if we look at let's just bring this volume. Where's my volume slider? It's right here. Let's bring the volume slider here. That is June of 2021. Kind of a high. It's kind of rejected off of this line right here at about 45. So if we look at that, you can see there's not a whole hell of a lot of buyers above. So, long-term kind of holders are not there. If we slide this back to where it really took the downturn, back here in 2017, where it really kind of turned, still, nobody's really holding. Everybody's holding in that 35 to 45 range. So in my mind, if I had a large position in this, I would definitely be trading it between 35 and 45. I wouldn't necessarily be holding on to it saying it's got to turn around. So I don't think it's expensive by any means. Let's see. Oh, why do I keep putting Z instead of C? Piece 15, forward piece 12, 4.38% yielding dividend. That's pretty good. Down 10% year to date. It's right in the middle between 30 and 42. Average target price is 38, and you're trading at what, 45? 36 right now? I'd probably play it to get up to that 45 at some point. Because here's the thing. With Kraft Heinz, are you going back down to 20-something? I mean, unless the economy's just shit, I don't think you're going back down to the 20s. So let's look at Intel for John. Let's see. I think I had some notes on a weekly on Intel. But God, look at that. I mean, just even on a weekly, just look. You go back here to like June. So even if you bought in June, and say you bought in June and you were pissed because you're down 5% over what? 11 months. But then you bought here, and now you're all of a sudden, you're up 34%. I mean, again, you probably would do better trading this one. Trading over 24 months, trading on the algorithm loses you 2.6. Buying and holding loses you 2.7. And part of the reason is, I'll show you, it's been in an upward trajectory if we go to a weekly. Doesn't look like I put notes in here. But we're just getting above the 200-day. I know the 50-day is well under the 200-day. So you went through this period between 2021 when Gelsinger, I think, was hired in 2021. Maybe it was down here in 2022 he was hired. But, I mean, he's turned the company around. I think he's doing a good job. And it's not a crazy valuation. The problem is, they mainly are a PC. They're losing money. Forward PE of 26. It's not crazy expensive. Average target price is 39. You're trading at what, 50? Most recent target price is 42. I mean, the high is 50. So I think you're getting up there in valuation. But if they continue to do what they've done, I don't see any reason why they can't turn it around. So it's a solid company. I mean, again, I don't invest in Intel. Chip wise, I've got NVIDIA and AMD. Those are the two that I've got. Let's look at QQQ. We're going to take all these annotations out. I got enough links to those damn things. Yeah, that second leg up. Look at that. That's just a solid. August, and September, and then October. I mean, this algorithm timed it perfectly. Here in QQQ, just to give you an idea, performance chart, 26% over 2 years in 24 position, one trade per month. And if you bought and held QQQ, you're up 2.1% over 24 months, 2 years. So, yeah. Okay. I think I've got enough to... Oh, I do want to look at SPY versus XLF, and then we're going to... Let's go from the bottom. I don't have that many links today. I have this. I have... This is Trader Nate. I like that one. Great video on X. And Tom Lee Fundamentals. And there's your, okay. And then we're going to, I'm going to go seeking alpha. And we're going to go XLF. And we're going to go charting. Oh, what was that? Strong sell from Seeking Alpha Analyst. Huh. Let's select symbols and let's do SPY. And let's do TPST. I don't know what DPST is going to come out with, but performance, update chart. There we go. Okay, yeah, that's what I want. There we go. Maybe even year to date. I'll do year to date. We'll include this. Why not? Let me go grab it. Copy. There we go. Okay. We'll leave that up. Hold on. I'll be right back. Okay, I'm back. Oh. I was blowing my nose. Okay, so we're gonna take that and do that. Hold on. Oh, Okay, I'm here. Okay. I'm here. Okay. I've got some. Hold on. Man. I'm coughing and blowing my nose. Like crazy. Like crazy. Oh, I don't want Siri on. Okay. Let me just go over my notes. I got a good one today, too. U.S. bought 3 million barrels of oil. $77 from Trader Nate on Substack. I liked him. Okay. Okay. Here we go. We're going to look at this mofo. Okay. Here we go. What up, crazy? Crazy. I like that name. Crazy K. Okay. Reminds me of like insane clown posse crap. Are you a juggaloo? Jugaboo? I forget what they're called. Insane clown posse. That's a part of this country's history we don't need to repeat. Okay. Good morning. It's Wednesday. It's hump day, December 27th. And I got some notes here. No show tomorrow. I'm driving back to Atlanta. There may be a newsletter, so sign up for the newsletter. If you're not signed up for the newsletter, it's dailystockpick.substack.com. You can get there or anywhere you want on this podcast from the link tree, linktr.ee/dailystockpick. You can get TrendSpider, Seeking Alpha, all that stuff on the on Linktree. But yeah, if a newsletter happens tomorrow, great. Probably not, but it's a bonus. Again, it's free. So it's a bonus. If you want to track these stocks and stuff for yourself while I'm on the road, get TrendSpider. That's the best deal. I did get a question about the paid newsletter. So the paid newsletter, and I go over this all the time, it is a bonus. It is on the weekends where I tell you about when I buy, when I sell. It's much more personal. It's more into the strategies that I employ personally. You're welcome to subscribe. There's nothing in there that's, oh my God, he didn't go over this on the podcast. A lot of this stuff is things that I go over on the podcast, but there's some additional notes, additional things, and people seem to like it. I've got a ton of new subscribers over the past week or two. I've gotten some great notes about people who have followed the podcast. Remember, the podcast is more about trying to help you find a strategy that works for you. My strategy doesn't always work for everybody, but just like people who follow Buffett, people who follow Bill Ackman, people who follow Ray Dalio, legendary investors, it can create your strategy. So that's what a paid one is. It's really, remember the paid, if you're listening for a while, but if you're new, I'll go over the story. I never meant to start a paid newsletter. Essentially what happened was your boy here's a boomer, and I screwed up. I started charging people who had quote-unquote pledged. I didn't know what pledge meant on Substack, and what it meant was when I started charging people, it automatically started charging the pledgers. So I just wanted to see what the pricing structure was, and I hit charge, and it started charging people. And thankfully, the tens of people who had pledged, because I had just started the newsletter, said, yeah, we don't want a refund. Just keep continuing publishing stuff. We're happy to, support you. So I sincerely thank them. I think I put thank you in every paid newsletter because I really do appreciate the support. But a question came in about the paid newsletter. Does it include the algorithm? And this was from a college student, and my answer was no. It does not include the algorithm. The algorithm, just so we're fully clear, it's a backtesting strategy that's built into TrendSpider. So essentially, it like you see on your screen, it gives you the entries and the exits. But it's a backtesting strategy that's built in there. What that means is it does use indicators. All of those indicators are, and how I use them, how I develop the algorithm, how myself and my buddy Steve developed the algorithm around COVID, all of that is in the paid newsletter. That's what I talk about, the strategy and things of that sort. But it identifies the TrendSpider algorithm identifies buys and sells. You're not getting that. You are getting the charts in the paid newsletter. But what I provide more of is the theories behind why I built the algorithm, how I built the algorithm, what the indicators are that use the algorithm. But you only get the algorithm in TrendSpider. So that's what it is. Yesterday's market, here's the heat map, yawn. AMD was up, Intel was up, chips were up, Nvidia was up, Microsoft was kind of flat. Everything, I mean, it's just, we're in a Santa Claus rally. I'll go over Tesla. Tesla's got a pretty good 53rd week of the year seasonally. So I think that's leap year, but we'll look at it a little bit. But yesterday, nothing super stupendous. I will put in the newsletter, here's some quotes from Tom Lee and Katie Stockton. Tom Lee on the fundamentals of financials. Interest rates are falling and mortgage rates will fall. And that will improve asset quality for the banks and also unlock demand for loans and reignite lending. So they should help regional banks and financials. Financials are under-owned by hedge funds right now. They are like the energy stocks of 2021. Huge quote from Tom Lee, who has been more right than wrong. Now, Katie Stockton, who's a technical trader or a manager looking ahead in 2024, it'll be financials. She thinks the financials will lead. The sector is second behind technology in the S&P weighting, and it has a base breakout in absolute and realty terms from SPX. It's contributing to the recent improvements in breadth and has potential to continue doing so with the breakouts. So what I did was, with those two quotes, I said, let's look at XLF. You can see year-to-date versus SPY, it's XLF is only up 11%. I say only, but XLF. I mean, if you had 11% in a sector in a year, you're happy. You get 26 in the S&P, you're like, doing backflips year to date. DPST is down 52%. You can see this one in March just broke down, and it hasn't come completely back. So while we look at DSPT, by the way, I did want to point out before I get to that chart, just look at how good the algorithm has been in the NASDAQ. Just QQQ, we had this big run from April to June. It got you out in August with a 17% gain, kept you out of the July downturn, the August downturn, got you back in August 22nd for a nice 2% gain, kept you out of that September downturn for a couple of weeks, got you back in October, got you a nice 0.32%, not great, but 1% in that October, but it kept you out of that big downturn. And then it gets you back in for this big upturn, and you're still in QQQ. But back to the financials and DPST. When we talk about DPST, this is the triple levered regional banks. And so when Katie Stockton and Tom Lee say, hey, the banks are going to lead next year, that might be an opportunity for DPST to make its comeback. You can see here, back in November 1st, October 31st, the algorithm got you in at 44. You're still in with confirmation. And this is huge. 115% so far. I repeat, 115% in the algorithm. Here's an example of the algorithm over 2 years, losing you money, but it loses you less than if you bought and held. Remember, This is a triple levered ETF, so you don't necessarily want to hold it unless you're absolutely sure that long-term regional banks are coming back. So it's something that you want to look at, but it is a risk. Don't load money into this thinking I'm going to YOLO into this. So DPST, over 24 months, you have 30 positions in the algorithm. You lose 80% of the time. You win 20% of the time. Your average win, though, is 38%. That does not include this. So when we finally get out of this run, you will see how good this algorithm has done versus just buying and holding. The algorithm loses you 47%. But when you take a look at the long term on this one, this is what I wanted to point out, is that we've fallen so far. Now, this is a decaying asset because they use options and they use premiums to actually triple lever the regional banks. You're going to see this always lose money. This is not, and that's why I say it's not an investment. You will lose money on this one long term. Just like every other triple levered ETF, even TQQQ, even though it's been a long-term great gain, you still don't want to do it because if the NASDAQ has a huge turnover, you're just losing too much money. So you do want to, this one you probably want to trade, but I still say you still have some room to get to the 200-day, which is at $268. I would assume $200. It's trading at $102. So another 100% gain in this one, I don't think is out of the realm of possibility. Look at the volume, how high it's been. This has been getting huge attention. So when Katie Stockton and Tom Lee say that, I kind of think, maybe you want to look at this. So keep in mind that XLF would be a great place to buy. If you want to buy any of the banks, I do think that they're underowned. I personally own Bank of America. In our core portfolio, we do have Bank of America. Do I have any other banks in here? I don't think so. No, I think Bank of America is it. I personally own Bank of America. I personally own Wells Fargo. I personally own Citicorp, Citi, Bank. I do own Morgan Stanley. I don't own XLF. I just sold out of a bunch of XLY, so maybe I'll throw it into XLF. My plan was to put it into XLK, but XLK is at 52 weeks high. It's a little bit high. The U.S. announced yesterday they bought 3 million barrels to start refilling the strategic oil reserve at an average price of $77. If we go over here to FinViz and we look down, the crude oil, it's trading now at $74. So they bought it $77. At some point in time, oil starts going up. I like playing UCO. UCO right now, you don't really have confirmation. I've said this before. I've written this in the newsletter. Here at 27, you're in. You're trading at 28.69. You have confirmation. So if the 50-day starts turning, I think positive, and we can hold it, I think this one might be a good play. I think that oil is probably going to trade between 70 and 90. But remember, this is a triple levered ETF. You don't want to hold on to this one. So be careful. I found a great video from Brian Stoffel, his top 10 holdings of 2024. And the number one is a new one. I thought it was a good video. I'll put it in the newsletter so you can watch it. I thought it was pretty good. Trader Nate, I subscribed to his newsletter, and he's got a really good, he's a TrendSpider affiliate. He's got a really good chart here. And he looked at Mara, he looked at SOFI, and NEO is actually crossing up here. And it's what's called the average VWAP, anchored average VWAP, I think is what it's called. Let me see what they actually call it. Anchored volume weighted average price. It's in TrendSpider. I don't use it. You can subscribe to Trader Nate. I will include that chart of NEO that he drew in the newsletter, but subscribe to him if you want to read it. I'll include again a link to his in the newsletter. But you're just crossing the 200-day. And I got a question from a friend, is NEO a good buy? And I told him, it's just hard because it's China stock. You don't know where it's going to go. They just got some influx. They're expanding into Europe from a weekly perspective. You're still super, super weak on this. You're starting to get that upturn, but you've gotten that upturn before. If you were trading at $9 and you made it to 15, that was great. Did you know to get out? So on the 4-hour algorithm, it's a little bit hard because you do still lose 66% versus just buying and holding loses you 69%. You're trading above that 200-day. But Trader Nate seems to think that, hey, with Mara and SOFI, he's found a pretty good anchored VWAP to try and look at. I thought it was interesting. It's just daily candles. Yesterday, we saw the average average VWAP break for NEO with a close above on strong volume. This is a nice setup for a continuation higher if shares can hold above the VWAP and not dip back down. That's his note. I thought it was pretty interesting. I'll include it in the newsletter. I'm not investing in NEO, but I do think that you could take a trade in NEO. Now, Tesla. TrendSpider posted yesterday, since the IPO in 2010, Tesla has a 100% win rate next week. Something to keep in mind. I wasn't a fan of this one, and the reason being is because, and I'm going to take all of this stuff out. I'll remove all this. I think Tesla had a bullish run, and we still have a bullish run. You're gonna, head into the deliveries, the year-end deliveries. So far, I've been getting like 5 emails a day from Tesla, which makes me think that they have inventory and they're wanting to sell it. But 251 was the buy-in. You're trading at 256. Long term, I think you're fine. You got the golden cross. You're up above the 9-day. I think you're okay. But if we go and we look at the seasonality, and I do what TrendSpider did, and I go back to 2010. Let's just go back. We'll go to 2010, June 2010. And you go to the week of the year. They're right. The next week provides you 100% win rate. But I think that goes back to the first week where it's 46% win rate. I think that's leap year. And so I think that's, the weeks of the year that are the last week of the year that includes a portion of next year. Well, on the calendar, we don't have a next week where we trade. So I'd be a little bit careful of that one. But I do think if you got in at 251 or below, if you got in at like 200 in November, early November, I think you're fine on Tesla. It's expensive. It doesn't trade on valuation. You can see here, it clearly just rejected the 50-day, just bounced off the 200-day. Your oscillator, your MACD is right on the oscillator. The RSI is at 56, kind of in no man's land. So be careful. I think it was interesting. I wanted to bring it up. Dex from Spotify. These are social requests. Zoom. Thanks in advance. Really appreciate your podcast analysis. Zoom is an interesting one because this was a pandemic favorite. When we were all video conferencing on Zoom, everybody thought, oh my God, this is the greatest thing. I think if we go look at a long term, I think you'll see the spike during COVID. Yeah, you can see it here. January, I mean, it was interesting because I think this was one of the ones that my dad got an email from Motley Fool in January. And it said, hey, Zoom is a video conferencing service. We think it's got possibilities because if the world shuts down, they need it, blah, blah, blah. You went up almost 600%. I mean, probably even higher if we look at this one. Yeah, 600%. So that was the time there. It's just lagged down and the 50 days starting to turn a little bit more kind of thing. You're trading at levels that you were pre-pandemic. So it was bound to get back there when people just realized. In my notes, I put Zoom is more of an issue of a video conferencing software platform by itself can't stand alone. It's not very valuable. So either they have to expand their product line or get bought. And the problem is that nobody wants them. So here's the deal. If you work in an office, most offices license Microsoft or license Google as their kind of software, word processor, PowerPoint, whatever you want, they license that software. Both Microsoft and Google have free tools, video conferencing tools. Why as a company are you going to pay Zoom? And part of the thing is Zoom is putting in some additional tools that Teams and Google Meet don't have. So they're doing things that are a little bit different. I don't think it justifies the price. It's still rather expensive to its valuation. So you can see the PE is 99. The forward PE is 15. So as long as they keep it, they're not paying a dividend. Year to date, you're up 9%. It's not horrible. Your 52-week high is 85. You're 12% below that. Your average target price is 80. You're trading at 74 right now. If we look in the algorithm loses you 45% over 2 years. You lose 59% when you just buy and hold. This one has been in just a great run here. Down here in November 1st, you were there. You're currently at a run at about 24%. Not horrible. You had your golden cross here. The 50 days continuing to move higher. But if we pull this back a little, you can see, I mean, it just regularly kind of bounces off this level of about 75 or so. There's one in July. There's one in September. If I pull this back a little bit and we just look, you're seeing it back here in April. Just bounces off that 75 level. So while I think it's not a bad company, while I think you're probably fine in looking at it, I just don't see the benefit in throwing money into this one because nobody wants to buy it. B, I just don't see the product tools that they have. I could be wrong. The most recent downgrade is equal weight to $70. When we look at buys, nobody's buying it on the inside. Everybody's selling it. And they're selling it, under $1 million, about $1 million, but nobody's buying it. There's no buys there. So I don't see Zoom as a super, oh my God, I've got to play it. I think there's better places to put your money. Doesn't mean don't trade it. Just, it's not one that's going to zero, but it could still go down. Spider from Spotify, Tilray and any good cannabis stocks to invest in as we get closer to legalization. Here's the thing that you have to know about pot stock, Spider, is, and I wrote this note, I will read this word for word. From what I know, I think drinks like Constellation brands are better to invest in than pot stocks because there's problems with keeping up with margins. And to explain that, remember, margins are going to be key in pot stocks actually making money. The licenses, the taxes, things of that sort. That's what's going to kind of weigh on the pot stocks. Pot stocks have not done well. This is MJ. This is an ETF of pots. I mean, MJ has been a solid, you can invest in it. You can lose money. Look, that's the pot stocks as a whole. Every pot stock that you look at is like that. And it's not because it's illegal and it's not the hurdle to illegality. It is because the illegal trade is still so much stronger than the legal trade. Anybody that knows edibles, anybody that knows how to get pot from, a local dealer, go to Vegas. It's like 50% higher in the dispensaries than your local person. Don't ask me how I know that. I just know it. I typically do the legal stuff. So if I'm in Colorado, if I'm in Vegas, I'm going to the dispensary just because I'm so nervous about getting caught and stuff. And I don't smoke. I only do edibles, and they tend to actually have better baked edibles than somebody who I just find on the street who's selling pot, and I don't want to cook. But the illegal trade is significantly bigger one. The illegal trade also doesn't have to pay taxes. And until there's some enforceable way, like for instance, moonshine, they really cracked down during the time of prohibition on moonshine. And people, the illegal trade took off. When they legalized alcohol again, it took quite a while and a lot of enforcement to get that illegal trade down to where people weren't selling their own moonshine for significantly less. So I don't think it's the license. I think it's the enforcement. As they make it legal, the illegal trade actually turns into a bit of a, hey, we're just going to sell it for cash with no taxes. And that's how they're going to essentially try and drive those prices down and the margins go. Now, if you wanted to invest, I think from what I know, Constellation Brands is STZ. This is the one. I think they've taken a stake in Tilray and stuff like that. It's trading under the 200-day. You're seeing it kind of just bounce in there. Long term, I think this is one of the ones that should get, and I think drinks, to be honest with you, are probably the next step. They will make them taste better. They will make them, you don't have to smoke. There's a lot of people who just don't like smoking. And I got to tell you, when I go to one of the places where it's legalized, like Vegas, like Washington, D.C., and other places, oh my God, the smell is horrific in public places. So I think that's going to be part of the crackdown as well, is smoking, smoking marijuana and stinking of marijuana. it's not going to be a good thing when it gets legalized. So the illegal trade, I think, just becomes, and there's a lot of problems. So I wouldn't try and take the jump on this. I wouldn't try and time it, but if you wanted to, I would take the more of the MJ ETF or Constellation Brands or one of the drinks. I come from the land of lizards from Spotify. RYCEY. This is Rolls-Royce. And this is, it's a holding company. So it's out of Britain. It's over the counter. So when you're trading it, good luck in connecting the dots from, buyer to seller. It does have enough volume that I think you'd be fine. I don't particularly like trading in stocks like this. I don't think that you're going to from $3.56 to $400 anytime soon. It's a good rebound. You just on the weekly, you just had the cross up, the golden cross here. RYCEY isn't even in Finviz. It is in Seeking Alpha, so we can go over here to Seeking Alpha, and we look at RY. Let's see, Rolls-Royce Holdings, RYCEY right there. You can see it's got a buy from Seeking Alpha analysts. Wall Street analysts have it as a buy. It's been a good stock. I just don't, I don't know enough about this one. It's an over-the-counter stock. I think everything points to it's a good buy. I don't know enough about it. You can see the 52-week range. You're up at the 52-week high. $3.97. You're trading at $3.86. Earnings per share, not 11 cents. PE is 15. That's not crazy. There's nothing crazy about this one. Everybody seems to like it. What I would do if I were you, I come from the land of lizards. I'd probably subscribe to Seeking Alpha. In fact, I think today I think it's 169. I think they lowered the price down to 169. If you want to take a look, go over here to Linktree, linktr.ee, and look at that second link. It's up to $50 off. So when they lower the price, you'd still get $50 off. But I think it's 167 is where it's at. So if you want to look at Rolls-Royce and other stuff, because you can look at peers. You can go over here and look at peers, and they've got a bunch of other ones. LHX, BAA systems, things of that sort. It's mostly defense stuff and aero system stuff. I looked at a little bit. Nothing popped out at me that, oh my God, it's super exciting and I've got to get in on this. Other than the weekly looks really good. In my mind, I don't think it's a bad trade. I think it's a good one. Costco, speaking of things, Costco's ex-dividend date is today. It is down 1.66% to 660. If you wanted to buy this and get the $15 dividend in January, you can buy it today. You have to hold it until tomorrow morning, but you can buy it today. At the close of today's record, you can start to sell, I believe. But it is a $15 special dividend, which is about 2%. Let's see. What's 15 divided by 663?
The answer is approximately 0.0226.
So for holding for a day, you could get a 2.2. Remember that $15 comes out of the stock tomorrow. So say it closes at $660. It would be down to $645. It would open up at tomorrow. Just know it comes out. I think that, typically dividends come out. The stock, the only people that really kind of drive that price up are the people who kind of don't understand that the dividend comes out of it. And they're like, oh my God, it dropped down. I'm going to buy this. Probably something. You trade in my algorithm and the algorithm doesn't have you out. Probably isn't going to get you out tomorrow. But you see the MACD is super high. It's crossing down. The RSI is at 70, it looks like. Coming off of like 80. So it's just been overbought. It's too much for me. Even that 2% dividend for me, I'm kind of thinking I'll just buy it tomorrow at about 640 or 630 and make the money back when it starts rising again. Costco, great company, great investment. It's just been a really good one. So the scans, let's look at some scans. TSM. This is Taiwan Semi. I said, hey, get this under 100. It's at 105 right now. It's got another leg up. I mean, that MACD is kind of crossing up there. I talk about it all the time. My algorithm is based on MACD. That RSI at 62, it's a little bit overbought. At 105, I'd probably wait for it to get a little cooled off. But if we go to the weekly, you can see that 50-day is just crossing up on that 200-day. You've got a great opportunity, I think, here to maybe get back to the 120s if we continue up there. The problem is you have with Taiwan Semi, I will point this out, is that Xi told Biden he is going to take back Taiwan in no uncertain terms. He wants it to be peaceful, but he's going to take it back. You don't know when that's going to happen. You don't know how it's going to happen. If it does happen, Taiwan Semi is located in Taiwan. That's a problem because that would probably, again, any Chinese company can't issue stock you can't own stock if you're not a Chinese citizen in a Chinese company. If they start to take back Taiwan, what does that do for TSM stock here in the U.S.? Don't know, but it's an interesting one. Pepsi, I've talked about this one, and Coke. Pepsi, I think, is a $180 stock. It's trading right now at $168. You're seeing it just kind of balloon up. Again, I don't think 168 is crazy price for this one. When we look at the weekly, it's kind of on the bottom of this range. So I put this range in long ago. It was before it made this downturn, and I said, hey, it's kind of at the top of this range. So I would expect it to kind of break down a little bit. It did break down. Look at that MACD. Pepsi is probably a pretty good, if you believe in colas, if you believe in salty snacks, Pepsi is a pretty good one. We had a question about JEPI the other day, and I said, hey, JEPI is just for income. JEPI, you can see this one, 5.6. It's got another leg up. It's got a cross up here. So, if you want to get into JEPI and you want some income on that one, I don't think long-term it makes sense, but we had a couple of triple levered ETFs that seem to have gotten a cross up on the MACD, but there's no confirmation above the 9-day. So I'd be very careful. If you're thinking that you're going to buy SQQQ, which is a triple levered ETF on the downside, on the bear side, it's an ultra pro short of the Qs. This is one that I would probably not take the trade on right now. I'd rather wait till you get to 34 than to try and buy it at, 14, than to try and buy it at 13. I'd rather have that handle at 14 and have the confirmation above that 9-day. Yes, the MACD is way down. Yes, the RSI is way down. Do not try and time this one. Get into the run early when you have confirmation. Try and do that one. Now, an ultra short of the S&P, SPXU, also got a cross up. Same exact thing. Wait. Be patient. There's no reason to get into this one when you don't have confirmation. Yes, the MACD is down. Yes, the RSI is down. Do not try and time it. Wait for the confirmation. I'd rather see you get in at 9 with a 9 handle than to try and time it at 8. Because again, if you got in here at 9, you never had a chance to make money because you never really got confirmation. There was never really a move. So wait for this one to try and get some confirmation. Let me see if there's any. Zoom had a cross up. Another one that had a cross up is ARKK. And I'll show you a double levered ETF on this ARK fund. But this one got a cross up. You can see that MACD is just riding super high. The RSI is up at 63, totally overbought. I wouldn't buy into this one right now. But when you look at a long term, and I posted this, I think I posted this in the paid newsletter. I'm tempted, and I may have just written these notes and not posted this at all, but I'm tempted to get back into ARKK, and it's up 55% from November. It's up even a little bit more than when I wrote this note. It's just below its 200-day, and if you get the 50 days moving positive, this one's an interesting one because you still have 36% just to get back to the 200-day. If we go to a monthly and we go out a little bit longer, you can see there is no 200-day, but you're below that 50-day. And that 50-day is at 73, 72. So you still have a significant move up here of about 43% to get up there. So it's an interesting one. But if you think that is going to move, TARK is a double levered ETF based on ARKK. Look at this move. back here from the beginning of November, 125%. 125% in this one. And we just had another MACD cross up on the 4-hour. You can see this one. It's still got confirmation on the weekly. It's still moving up. We don't even have a 200-day because this is a rather new ETF. That 50 days moving positive. You have all the confirmation in the world. But again, this is a double levered ETF on the ARKK. I will include all of the rest of the scans in the newsletter. How do you get the newsletter? You go over here to Linktree, linktr.ee/daily stock pick. The newsletter's down here. It's dailystockpick.substack.com. It is free. It is free. There probably won't be one tomorrow, but I will post. I usually post every day that I do a podcast. I post the notes. The notes along with it, all the charts, links to all of the episodes, videos, anything that I find during the day that I think you should know about. I also at the end post the scans. And if I think it's a kind of a great chart, I'll usually post the chart. If you ever see a scan, you want me to post the chart, just let me know. But that's how you get to the newsletter. TrendSpider, let's see what I think their sale may have ended. But if you can still get it, did they extend it? It is now, they extended it a little bit, 5 more days. I think they're going till the end of the year with this under $400 price. They haven't given me total thing. Don't wait on this because, again, the best deal that you're going to get is this under $400. And I think you just start the year off with the tools that you need. And TrendSpider is one of those tools that you need. Listen, it's essential for me to have TrendSpider, so I tend to, not BS anybody. If you don't want to tip me, if you don't want to say, hey, thank you for all your work, buy TrendSpider, get yourself a tool. I mean, I'm an affiliate, so I do get paid when you guys get paid, when you guys pay for it. And Seeking Alpha, I'm also an affiliate. Like I said, I think today is the 167. It goes till the end of the year for 3 more days. I think you save an additional $25 off my discounted price of $180 something. So click on that link. The biggest thing you can do for the new year, and I did this last year, was I clicked on a link and I signed up for Webull. I got some free stocks from somebody who was an affiliate. I'm an affiliate, so I get some free stocks. But if you sign up for Webull, I put $1,000 in there last year. And I have grown that to, let's see, it's replaced my sports betting. My sports betting, I've grown it to $3,739. So it's been a great thing. I used to lose money on sports. Now I make money on stocks. I'm better at stocks than I am at sports. So you get that. If you got a new phone, I just got my parents 2 new iPhone 14s for Christmas. Visible. I don't think you can beat this. And I'm personally on this, $25 a month. It's unlimited. If you don't want to deal with the deprioritized data stuff, I don't necessarily have a problem with it. You do get faster 5G on the $35 one. It's $10 more a month. Again, if you're single like me, you don't have family, 4 phones to put on a Verizon phone plan or a T-Mobile phone plan, Visible's the way to go. Because it's $35. That includes taxes and fees. So it's $35 out the bat. I get my bill every month for $25. Porting your number in, super simple. I tried to it took me 4 hours yesterday to get my parents' phone numbers off of AT&T to port them over. That was crazy. Nuts. These new phone companies, they do it so much better. It's online support. It's fantastic. You get right through. I was able to chat with about 5 different people at Visible before AT&T even picked up the phone when I was on hold. And there's no chatting with AT&T online. Sure, you can go to a store, but there's they can't do anything for you. So douches, just douche. If you are in the market for a Tesla, use this link. You'll get $500 off. You get 3 months of full driving, blah, blah, blah. AT&T, refer a friend. I do have fiber at my house. So that's it. If you want to follow me on Savvy Trader, the core portfolio is over in Savvy Trader. I've got 2, one trading portfolio. It's $25 a month, but I don't do enough to justify it. Subscribe to my my newsletter rather than subscribe to the trading portfolio over here. But the core portfolio is free. You can subscribe to it. I put names in here and out of here. It's usually once a quarter. I didn't do it this quarter because I did it last quarter, and I'm pretty good with what's in here. Coke was going to come out and Pepsi was going to come out. I just kept them in here. And the reason I kept them in here is because I don't want to sell them at in the core portfolio under 60. And I don't want to sell Pepsi under 180. They'll hit that. Trust me, they'll get back to that price. It won't be a problem. But this is the third. If you're new to trading, this is the portfolio that you want to try and build. And so if we compare this, I started this in June. So I started this at the highs in June. And when you look at it, the core daily stock pick core portfolio from the highs in June down 0.45%. SPY is up 0.19. So I'm not quite beating SPY. Let's look at the Qs. The Qs, I'm down 0.45%. The Qs are up 0.44%. IWM, the small caps, I'm down 0.94. How am I down 0.94? I don't know how this works. Oh, that's 1 week. Let's say all. I was wondering, how am I not beating SPY and QQQ? SPY, let's see. SPY, the daily stock pick core portfolio, is up 9.8% since June. SPY is up 8.27%. So yeah, I'm beating that. Let's see about IWM. I think I'm beating IWM. No, IWM is up 10%. I'm only up 9.8. IWM is the small cap. Qs is up, let's see. Qs is up 11%. I'm up 9.2. So I'm beating the S&P. It's been a pretty good year. And IWM seems to have come back since June. It came back with a vengeance. So if you want to follow me over there on Savvy Trader, it's a great tool. I say journal your trades. You should sign up for it anyway. If you want to gift me, Venmo, PayPal, Cash App are all right here. And if you want any of the social media, Facebook, X, Twitter, Vase, whatever you think, and Instagram, and YouTube. So, okay. Take care. I'll talk to you guys. Not tomorrow. The no show tomorrow. I will probably talk to you Thursday. No, I'm sorry. Friday. I'll probably have a show. Okay. Take care. Bye. Okay. Let me look at your comments now. Yeah, Matt. I think a lot of large cap companies like Disney, they use both. Morning, Michael. Morning, VRO. Hey, welcome back, VRO. Morning, Chris. Morning, D-Man. Morning, Sherry. Christian, fight the power. Yeah. I agree, Christian. I'm not like completely conspiracy theory, and you have to, the government is all bad for you. The government does good stuff, but I do think it's ridiculous that marijuana. The only reason marijuana is illegal is because the powers that be back in Prohibition times thought that alcohol would be a better moneymaker because it was easier than growing cannabis. HNST? I don't even know what HNST is. Oh, that's the Honest. Yeah. The Honest Company. Kudos, Sherry. I mean, if you bought in, how much is this? Let's see. Wow, it's 174%. Hold on. I had to blow my nose. So, D-Man, there's no hard and fast rule on confirmation because, for me, it's the 9-day. I mean, I just want them to be over the 9-day. That's typically, if I'm on a 4-hour chart, I want to be over the 9-day. If I'm on a weekly chart, I want to be over the 9-day. That's my thing. If you go to Investopedia, I think, let's see, do they have confirmation? Positive confirmation. There you go. Positive confirmation. You can look at this, understanding positive confirmation. There's different kind of stuff. Accounts payable, positive versus negative confirmation. I guess that's not it. I use it, and the term that I've always kind of grown up with is, hey, confirmation is above that, whatever moving average you define. There's some people that use a 5-day. There's some people that use a 21-day. There's some people that use the 50 or the 200 as confirmation. I particularly like the 9-day. And the reason I like the 9-day, and I think, this is probably in the paid newsletter, and I probably should leave it there. But the reason I like the 9-day is because that is under 2 weeks, but over 1 week of trading, because it's a 9-day period. So, if you're in a weekly, you've got 2 weeks in that line. So you can see you've got confirmation over that 9-day. And typically look at that 9-day has just been pretty solid for me, in that if you're continuing down, you're below that 9-day. If you're going to make a move up, you got to be over that 9-day. So you can't time the bottom, you can't time the top, but that just seems to be a pretty good way of kind of looking at things. Okay, and it's 9:30. I'm going to get out of here because I do have a lot of packing and stuff to do. But if you guys have any questions, you can always hit me up. I'm pretty good about getting back to people. Pretty good. Yeah. Thanks, Sherry. Yeah, I'm just driving back. I'm trying to avoid here on the East Coast, we got a weather system that's coming through. It was supposed to pour all day today, and it says it's raining now, but it's not raining. When I look at the, let's see, when I zoom out and I do the next 12 hours, oh, come on. We're going to 12 hours. Oh, the Apple Weather app is messing up, and I can't see the precipitation for the next 12 hours. There we go. Okay. It looks like the storm has... looks like about 5 or 7 p.m. Yeah, the storm's going to be a little bit bad. So I'll get out of here. Probably at like 9, 10 o'clock tonight. So, I'll be back later. Probably Friday, I'll wake up, decide to do it. But tomorrow, the problem is if I leave at like 11, 12 o'clock, I get there, around noon, 1 o'clock in the afternoon, probably, more like 3, 4 o'clock in the afternoon. And, maybe even 5 or 6 at night. I get a good night's sleep. Then the next day I can wake up and do the podcast. So I love McDonald's. Oh, I love McDonald's. And I just turn on autopilot, and then it yells at me if there's rain. So for anybody with a Tesla, you got the new update. This will be my first one on the new NHTSA, National Highway Traffic and Safety Administration, who made Tesla do that stupid ass fucking recall that they called it. It nags. Supposedly, it nags you more to kind of pay attention. it's just ridiculous. I mean, I saw, if you want to watch it, it was actually a fairly good show. I watched This Week with John Oliver, Last Week Tonight, I think it's called, on HBO Max, with John Oliver. And he went after Elon this past weekend. And I don't disagree with him, and he brought up a good point. He said for all the people who are using full self-driving, people didn't opt in. The other people on the road, while you as a Tesla driver has opted in for a beta product, I myself, as a fellow driver who could get hurt by full self-driving if it decides to steer into another lane or something like that, I myself haven't opted in. So that NHTSA decided, okay, we're going to limit all drivers on this thing, even though the numbers, the amount of times, the amount of hours that have been driven on full self-driving is enormous, enough statistically to say it is far superior to human drivers. So, John Oliver went on to say, well, it's not that safe. And he showed a couple of examples where it was bad, but by far it is safer than humans. So, Christian's going full tin hat. Christian with the foil hat on today. I like it though. Christian, you're funny. I don't know. Did I stop on here? It says I'm still live, but I don't see Christian's chat in the chat room. I see it on my OBS, but I don't see it in the chat room for some reason. Okay. With that, I think my computer or YouTube's messing up. So I'm going to go put